Hey, what's up, guys? Brad here. So I am in Park City, Utah for the next 2 weeks. I live in the Bay Area in Oakland, but I wanted to see my son's grandparents. I wanted him to get a chance to spend some time with them. So we drove out to Utah, and the grandparents are driving out from the Midwest to meet us in Utah for the next couple weeks. So that's why I've got a different setup. Just wanted to let you know that. So let's dig into something really interesting here. So according to Google Trends, searches for how to buy stocks just hit an all-time high, and it's not even close. It's an all-time high by far. And it peaked on March, kind of the week of March 18th, when the stock market bottomed in the recent past. So that's interesting. That gives me some hope, actually, for people who have never bought stocks before, just to see that there's correlation between when they're most interested in buying stocks and when stocks are the cheapest. That gives me some hope that people are really paying attention to the right indicators in terms of when to buy into stocks. But I also wanted to dig into, what Google is telling these beginning investors, right? So if you search how to buy stocks, you get a number of related questions that are recommended by Google. And I wanted to dig into some of them to see, how good I think the responses are from Google. So one thing that pops up here, what stock is best to invest in right now? Okay. I'm sure that's a popular question from new investors. So the results it gives here is a list of best stocks as of April 2020. And the way it does this is these are the stocks that performed the best over the 52-week period from April 2019 to April 2020. So the best 52-week kind of increase in stock price. And you've got Lam Research, Apple, Biogen, and Microsoft. And they're all basically around 34%, which is the price performance in the previous 52 weeks. So I got to tell you guys, I take issue with listing stocks that have done the best in the last 52 weeks as the best stocks to invest in right now. I take issue with that because, price increase over the last year, to me, it really has nothing to do with quality of a stock. And even more so, I think stocks that have gone up the most over the last year are perhaps more likely to be overpriced right now. They're more likely to be kind of in bubble territory and not a good value for investors. So, I take great issue for kind of using that as the metric to present a list of stocks that may be best to invest in right now. So, already we're not off to a great start here from these Google searches. Now, here's an interesting one. What is the most expensive stock ever? Okay. Now, when I originally heard that question, I thought, well, most expensive stock ever, it must be a stock where the price is just so much higher than the underlying business value of a stock. So, that's how I think of expensive. When you have a very high price that the stock price is really pushed up by kind of the auction-driven nature of the stock market as compared to the value of the underlying assets. I mean, when you buy a stock as a value investor, really as a long-term investor, you're buying a partial ownership in a business, okay? And in order to value what that's worth, you've got to look at the underlying business. What is your partial ownership worth based on future earnings of the business? So anyway, the most expensive stock ever is Berkshire Hathaway A shares, okay? Indisputably, the number one in the list of the most expensive stock in the world for many years. I don't know where it's at now. I think it's maybe around $270,000 for an A share. Of course, there are B shares as well. I think those are trading closer to maybe $175 per share. But I also take issue with this answer, that the most expensive stock, they would say, is Berkshire Hathaway A shares, that they're purely going based on how many dollars it costs to buy a share of stock. That's not how I would look at expensive stocks versus cheap stocks. Obviously, on the surface, you might look at it that way. As a beginning investor, someone who's never bought stocks before, it makes sense that you'd go purely by the number of dollars it takes to buy a share. But initially when I thought of most expensive stock, I did not expect to see Berkshire Hathaway. So my wiring, I guess, is a little bit different from beginning investors. And again, I don't like this answer to that question. I would look at maybe companies that have the highest, the company that's had the highest price to earnings ratio ever. And I'm not sure what that is. It was probably some tech stock back in maybe the tech bubble, multiple hundreds, maybe even thousands in terms of a price to earnings ratio. Obviously, startups, you can get price to earnings ratios that are infinite because the company isn't earning money, and it doesn't usually give you a really high price to earnings ratio for that scenario. It just says, price to earnings ratio is not available because there are no earnings. But anyway, a little disappointed in that answer as well. Let's see what else we got. Is now a good time to buy stocks? It's interesting. So the answer starts with but. So I assume that there should be something before that. But what it says is, but if you're a long-term investor, now might actually be an ideal time to invest. If you've consistently contributed to your retirement and investment accounts over the last 10 years, you've been buying in at higher and higher prices. Okay, so I'm not sure why that means that now is an ideal time to invest. Usually if you're a long-term investor, there's two camps. So one is you automatically invest money, say, into a passive instrument like an index fund. And a great way to do that actually is just to automatically invest every set time period. So say every month you put a couple $100 or even $1,000 or however much you can into that index fund, and do it automatically. And that's really important to kind of automate your investing approach because the more actively we try to manage our investment accounts, the more our emotional biases come into the process. And good investing is really a learned skill. Okay, so if you're just flying by the seat of your pants, if you're letting your emotions, if you're letting fear and greed lead your investment decisions, generally you're going to do much worse than you would if you just automated your investment decisions. Okay, so I don't really understand what this is saying. I guess it's saying if you're a long-term investor, it's always a great time to invest if you do it kind of automatically, right? But if you're picking stocks, which it seems like a lot of people who are trying to figure out how to buy stocks, who have never bought stocks before, a lot of those people are trying to find the best stocks to purchase. So for those people, I would say now is probably not a great time overall to invest. Now, there's always opportunities to buy individual stocks. There will always be stocks that can be bought at a discount to what they're actually worth. But from what I'm seeing in terms of the overall market, things are expensive right now. There's a lot of people buying based on this question, how to buy stocks in Google Trends. So when there's a lot of people who are buying, it's usually not a great time to buy because that's what makes prices go up. the demand for stocks. The more demand there is, the more buying there is, the higher stock prices go. I mean, that's how an auction-driven market works. That's how the stock market works. So you really want to buy when a stock is out of favor, okay? Which there's been a ton of people buying Hertz, but that's not just out of favor. Hertz is a very risky stock, in my opinion. I think there's a very high likelihood of Hertz. Investors who are buying Hertz stock, I think there's a very high likelihood that they're not going to see a penny return on that investment. I think the stocks are going to zero. I mean, the company filed for bankruptcy. So you want a company that's out of favor, but you want a company that has a high likelihood of bouncing back, okay? And that's not what I'm seeing with Hertz. So is now a good time to buy stocks? I don't think so. But if you know what you're looking for, if you know how to find and analyze individual businesses, there's always some corner of the market where there are stocks to be had that are a compelling investment opportunity. What else? What stocks are undervalued right now? I mean, it just gives a list of undervalued growth stocks. MGM, Pfizer, JetBlue, Office Depot, and then it just gives the price. It doesn't say how these stocks are undervalued. There's no metrics to support this claim that these stocks are undervalued. So I don't know what to do with that. Should you buy Tesla stock now? Well, this is a lame answer. Investors should consider buying Tesla stock as part of a well-diversified portfolio of investments, according to financial advisors. That doesn't give me any information, okay? It's kind of the, fine print that all investment advisors have to say to protect their butts. Consider buying as a part of a well-diversified portfolio. Now, Buffett would say, if you're picking individual stocks, you should not have a well-diversified portfolio. Because if you're picking individual stocks, that implies that you have the skill to assess individual companies, okay? Now, if you're buying more than, say, 15 or 20 individual stocks, and you know what you're doing, then you're just diluting the returns that, you would get on your top 10 or 15 bets, okay? So if you're going to diversify in terms of like more than 15 or 20 stocks, you're probably better off just buying an index fund because it's already diversified. And it's just kind of silly to me that you would that you would dilute your returns as a stock picker. If you're going to pick stocks, you want a somewhat concentrated portfolio, okay? Because, if you're picking stocks, you're basically making the assumption that you're going to be able to pick stocks that outperform the market. Well, if you pick too many, you're not going to outperform the market because you're going to be the market, okay? So, Buffett would say diversification is for people who don't know what they're doing. All right. So if you know what you're doing, if you don't know what you're doing, you shouldn't be picking stocks because you're just there's no way you're gonna beat the market as a whole. You should just be buying an index fund. So this is kind of a lame way to answer this question.